A Plus Consultancy, Smart Strategies, Lasting Impact. Hi everyone, welcome to our presentation in Merrymart Consumer Corporation, better known as Merrymart. In the next few minutes, we'll get to know what this company is all about, its story, what it stands for, who leads it, and how it actually runs its business using the Business Model Canvas framework. Merrymart is a homegrown Filipino retail chain that focuses on groceries, household essentials, and personal care items. You'll find their stores in malls, city centers, and now even in smaller neighborhoods, making it easy for Filipinos to grab everyday essentials without the hassle of big supermarkets. What makes Merrymart interesting is that it doesn't just rely on one type of store. It has several formats. Merrymart Grocery, which is the full supermarket experience. Merrymart Market, a mid-sized version with more fresh and premium products. Merrymart Express, a smaller store that combines a mini grocery, pharmacy, and convenience outlet. And Merrymart Wholesale, an online and business-to-business platform that offers bulk orders with live inventory and next-day delivery. So it's both a physical and digital retailer, trying to capture every shopping occasion, from the weekly grocery run to last-minute restocking. Merrymart's mission is rooted in bringing convenience and joy, or as they like to say, to make everyday merry for every Filipino household. Its big picture goal, called the 12-12-12 Vision 2030, is to roll out 1,200 branches nationwide and hit 120 billion in system-wide sales by 2030. Merrymart to become the largest and most relevant household essential store retail chain in the Philippines, delighting its customers across Luzon, Visayas, and Mindanao. Alongside that, the company emphasizes values like sincerity, integrity, hard work, and fairness. It's also big on long-term sustainability, aiming to build ventures that endure and stay relevant through time. In short, Merrymart's promise isn't just about low prices, it's about reliability, trust, and the feeling of familiarity. That sense that your neighborhood store will always be there when you need it. Let's rewind a bit to understand where Merrymart came from. The company traces its roots to Injob Supermart, a local supermarket business founded by the Sia family in Rojas City. In 2009, the group formally incorporated Merrymart Consumer Corporation. But the real brand launch came a decade later, in 2019, when the first official Merrymart supermarket opened at the Double Dragon Plaza in Metro Manila. Just 1 year later, in 2020, Merrymart went public and listed its shares on the Philippine Stock Exchange under the ticker symbol MM. That IPO marked its transition from a family business to a public company with nationwide ambitions. Since then, the company has been rolling out stores, setting up distribution centers, and expanding into online wholesale, all aimed at achieving the Vision 2030 target. At the top of Merrymart is Edgar Injob Sia II, the visionary behind the brand. Edgar Injob J. Sia II is a prominent Filipino entrepreneur, best known for founding the popular Mang Inasal fast food chain and co-founding Double Dragon Properties with Jollibee's Tony Tan Cactiong, a real estate and hospitality company. He is recognized for transforming the fast food industry with his innovative OmniRice, or Unlimited Rice promotion at Mang Inasal, and for his continued success in real estate development with Double Dragon, its subsidiaries like Cinemal and grocery chain Merrymart. Under him, Ferdinand Sia serves as President and Chief Operating Officer, overseeing daily operations. Ferdinand J. Sia is a prominent Filipino executive currently serving as the Vice Chairman and Director of Double Dragon Corporation and the President and Chief Operating Officer of Merrymart Consumer Corporation. He also holds significant leadership roles at other companies, including Injap Investments Incorporated and DDMP Rate Incorporated. Sia holds a Bachelor of Arts in Political Science from the University of the Philippines, Visayas, and studied law at Arellano University School of Law. Ownership wise, the Sia family's holding firm, Injap Investments Incorporated, holds the majority stake, which keeps the company founder driven while still open to public investors. Now let's talk about how Merrymart actually operates and what happens behind the scenes of those stores. The company's operations revolve around five key pillars. First is the retail store operation, everything from stocking shelves to customer service. Second is the franchise and conversion programs, allowing local grocers to adopt the Merrymart brand while keeping ownership. Third is the wholesale and online operations, serving both households and small businesses through the Merrymart wholesale platform. Fourth is the logistics and distribution, through strategically located warehouses and distribution centers. Fifth is the support services, such as leasing, advertising, and maintenance that enhance store performance. Together, these activities form a network that connects manufacturers, franchisees, and consumers. To understand all of that in one framework, let's visualize it using the business model canvas. Merrymart's customer segments include everyday consumers, small business owners, and even other store operators who become franchise partners. Its value proposition centers on being a one-stop shop for everyday essentials, combining the convenience of a sari-sari store, the variety of a supermarket, and the reliability of a national brand. For franchisees, the value is different. It's the ability to modernize their stores and tap into Merrymart's logistics, marketing, and supplier network. Merrymart reaches customers through multiple channels: its physical store network, which continues to grow across the country, its franchise program, bringing independent retailers, and its online wholesale platform, which offers bulk purchases and delivery. To maintain customer relationships, Merrymart focuses on friendly in store service, regular promotions, and the reliability that builds everyday trust. Franchise partners also receive ongoing training and operational support. Behind the scenes, Merrymart's success depends on the key resources: its store network, distribution centers, supply chain systems, and of course, its people. Its most important activities include procurement, logistics, marketing, and franchise support. Basically, everything that keeps shelves stocked and customers coming back. Partnerships are equally crucial. Merrymart works closely with suppliers, transport providers, landlords, and technology partners to ensure smooth operations. Franchisees themselves are also strategic partners, expanding the brand's reach without overstretching corporate resources. Merrymart's business model is all about scale and synergy, combining multiple store formats, a strong franchise network, and digital wholesale to serve every type of customer, while leveraging logistics to keep costs low. That's how it aims to achieve its Vision 2030: 1,000 stores, billions in sales, and a Merrymart in every Filipino community. Now let's review Merrymart's financial evolution from 2020 through 2024, highlighting the impact of its 2022 business combination, major financial trends, and the company's post-merger performance trajectory. Over the 5-year period, Merrymart demonstrated robust revenue growth, doubling its top line and successfully integrating its acquired operations post 2022. Despite rising costs, margins show steady recovery, supported by operational efficiencies and improved cash management. Sales expanded at a compound annual rate of roughly 22%. The 2022 business combination boosted both scale and gross profitability as synergies and procurement efficiencies began to materialize. After a margin dip in 2023, profitability rebounded in 2024, indicating stabilization of post merger operations. Operating expenses have grown proportionally with expansion. Notably, depreciation and personnel costs increased after 2022 as Merrymart absorbed new business units and leased assets. However, OPEX as a share of sales has gradually normalized, reflecting improving operational efficiency. 2022 was a transformational year. Merrymart recognized significant gains from acquisition, boosting pre-tax income nearly 11-fold. Subsequent years show a natural correction, with income levels aligning closer to recurring operational performance rather than one-off merger effects. The asset base more than doubled, driven by expansion, store construction, and acquisition related intangibles. While long term debt increased to finance growth, equity levels and retained earnings also strengthened, underscoring Merrimart's sustained capital position. Liquidity fluctuated significantly through the combination period. The 2022 merger temporarily compressed working capital ratios and debt and payables surged. By 2024, cash balances improved substantially, signaling enhanced cash management and stronger internal funding. The 2022 combination restructured Merrymart's balance sheet with a marked increase in intangible and fixed assets, reflecting goodwill, store development, and right of use assets. By 2024, the company's asset mix had become more capital intensive, characteristic of immature retail operations. In summary, Merrymart's growth story is underpinned by bold expansion and merger-driven scale. The company now faces the next stage, optimizing capital deployment and improving operating leverage to translate growth into sustainable profitability. Having reviewed Merrymart's historical trajectory, the next step is to outline the strategic initiatives that will drive future performance, from operational streamlining to revenue diversification and capital optimization. Building on our own analysis of Merrymart's historical performance, this presentation outlines our recommended financial actions for the next 5 years, assuming no further physical expansion. Our focus is on improving profitability, liquidity, and overall financial health while maintaining a modest 7.8 annual sales growth. This projection assumes steady organic growth with no new stores. We base our recommendations on an average 7.8% sales growth per year, reflecting organic gains in productivity and pricing, rather than expansion. Under this base scenario, Merrymart's profitability strengthens progressively, with operating income expected to more than double by 2029. However, we see pressure on cash reserves in later years, primarily due to accumulated depreciation and continuing high debt service. While revenue is growing modestly, rising expenses and interest obligations continue to limit net cash flow. The company's liquidity peaks early in the projection period but begins to erode by 2028. This indicates a need to enhance working capital efficiency and debt management. First, we recommend optimizing working capital. By improving inventory turnover and negotiating better supply terms, Merrymart can release up to 300 million pesos annually in cash. Digital collection systems should further accelerate cash inflows and improve liquidity resilience. The second lever is cost rationalization. By cutting non-core expenses and centralizing procurement, Merrymart could lift its operating margin by up to 2 percentage points within 3 years, improving overall profitability without any revenue side intervention. Given the company's high leverage, refinancing, and gradual deleveraging should be prioritized. Transitioning debt to longer maturities will reduce annual interest costs and strengthen Merrimart's balance sheet flexibility. The fourth focus area is improving asset productivity. By selling underutilized assets and optimizing existing facilities, depreciation expenses can be reduced while maintaining operational capacity. Finally, Merrymart can drive higher profitability by focusing on margin accretive activities, such as private labels and data driven pricing, within its existing footprint. This strategy leverages internal capabilities rather than physical expansion. If these actions are executed effectively, Merrymart can achieve a 6% operating margin by 2029, significantly reduce its leverage, and triple its cash coverage ratio, all while maintaining steady growth without expanding its store base. In conclusion, Merrymart's long term financial strength will depend on disciplined internal improvements rather than external growth. With better cost control, leaner working capital, and optimized debt, the company can unlock strong profitability and cash generation by 2029. After analyzing Merrymart's performance over the past few years, our team's recommendation is to hold the stock. While Merrymart continues to expand its store network and strengthen its logistics infrastructure, the company's financial ratios haven't shown strong improvement yet. Metrics such as profit margins, return on equity, and leverage ratios indicate that the business is still in a stage of heavy investment and cost adjustment. In other words, Merrymart's growth story is intact, but the financial efficiency still needs work. Management has already started implementing operational and strategic changes, particularly in supply chain efficiency, digital integration, and cost control. These are positive steps, but their impact will take time to show in the financial statements. For now, the best course of action is to hold the stock while monitoring well how management executes these improvements. If we see consistent progress in key ratios, like rising margins, stronger cash flow, and lower debt, that could be a signal to upgrade the outlook to a buy. But until then, patience is key. Merrymart has the potential, but it needs to prove its operational stability and profitability before it becomes a stronger investment opportunity.